if Bitcoin starts to go wild, you'll know that it's getting fragile. If gold starts to go vertical, that'll be another sign that things are about to break loose. Obviously, oil is another thermometer. This is going to be a golden era. Not the stocks themselves, it's the method that's important. And my method doesn't have to be yours. You can use the same structure to have your own method. I mean, I'm not a momentum guy. I wouldn't touch NVIDIA with a 10-foot barge pole.
Clem Chambers is back. He is the founder of ANewFN. We're going to get his views on markets. Stocks are falling today on the 27th of February. The Dow Jones is down about 600 points. The S&P 500 is down 55 basis points. The Nasdaq's down almost 1%. Bitcoin's down almost 2%. Gold's up 1%. And we're going to talk about the software stock scare, whether or not the entire tech sector is falling apart. We're going to talk about Bitcoin, gold, and whether or not Iran is actually going to war with the U.S., at least a full-blown war. Let's find out with Clem.
That's the wrong way around, David. It's not whether Iran's going to go to war with America. It's whether America's going to go to war with Iran.
What's the difference if I punch you first and you punch me back? Either way, we're at war.
Well, who's picking the fight? But yeah, okay, fair enough.
But okay, we're going to get to that because I want to ask you what your view is. What's actually going to happen? It's the largest military buildup in the region since the Iraq invasion. Let's talk about stocks first. So like I mentioned, it's down 600 points, the Dow. And I want to just extend the conversation beyond the stock market into the economy first. Today we have the PPI, Producer Price Index, up. It's up 0.5% from an expected 0.4%. Core wholesale prices rose 0.8% in January, much more than expected. And on an all-item basis, I already said up 0.5%. So inflation, producer prices up a little bit more than expected. First of all, how would you interpret that as an investor? Would you be selling that on the news, or is that just noise? Clearly, the markets are taking that well.
I mean, if people think inflation's coming down over the next couple of 3 years, I think they're going to be very disappointed. I mean, the AI boom, well, I mean, you don't have to even think about things with all the tariffs being inflationary, but that's a one-off lump. But the AI boom is what it is. It's going to drive elevated inflation. And I say elevated inflation carefully, because I don't think it'd be runaway. It could get that way, but I don't think it will be. But it will certainly drive elevated inflation because they're going to be spending so much money, and the hyperscalers are going to be sucking all the cash out of the system to pay for all this. And the system wants it because AI is just a huge, hairy deal because it's a conflict with China. If China gets more AI and is smarter than America, well, that's good night, America, isn't it? So that means that all that money's going into the AI build out, but that means they're going to have to print a load more money to keep everybody else afloat. So they're going to be printing like there's no tomorrow, and that's going to be inflationary. Fortunately, the AI money is going to go into productive assets, at least initially. But I mean, anybody that can fix an air conditioning unit or wire some cables up or hang from a power cable or whatever, or put up steel sheds, they're going to be making so much money. They're going to be getting double, triple, quadruple time. And any company that does that, that's going to go through the roof. So the AI boom is going to be inflationary and pretty strongly inflationary. So people need to get used to the fact. Of course, it's good news for gold and silver. It's good news for stocks. It's good news for the normal guy because he's going to be in demand. And anybody with, good old fashioned skills that to fix things and build things, the money's going to the builders. And that's going to, be very, well, not very, but yes, why not? Very inflationary. It's going to be pretty blooming inflationary. So people need to get used to that.
Sorry, how is it going to be inflationary again? I thought technology, especially new tech, is going to be deflationary overall, especially since AI is going to put downward pressure on wages. Yeah, okay. So, no, it's not. Not in the short to medium term. Mm-hmm. In the long term, lots of different things will happen. But so you've got the hyperscalers who used to go la-di-la-di-la, we've made billions and trillions, la-di-da, oh yeah, great, fine, here's fantastic cash flow, buybacks and all that. Yeah, and they're now going, oh, we're going to spend trillions building out AI, and we're going to borrow the money. Well, who are they going to borrow it off of? They're going to have to borrow it off the system,
and the system is funded by government printed money. So there you go. They're going to be eating all the money. Well, what about everybody else? They're going to have to print more money for them. They can't just let Google and Elon and Microsoft and Amazon take all the available cash and borrow it all, because they can get to the front of the queue pretty easy, those guys, and they will, and they'll be there saying, "Yeah, give us a trillion. Give us another trillion. Yeah, I need another trillion. Oh, remember, we're going to launch server centers into space." They've even said that. All that credit that they're going to need, that's just going to empty the bucket. Well, they're not going to let everybody else go to the wall, are they? They're going to have to fill the bucket up with more money. And it's all going to be, all that AI money is going to go straight into the economy. It's going to go straight into wages. It's going to go straight into commodities. It's going to go straight into building stuff. It's going to go straight into wages. And that's inflationary. Yeah. So that's why it's going to be inflationary.
I was reading online, and by the way, we have a new book by Clem that's out. It's called 101 Ways to Pick Stock Market Winners. So we're going to get to some stock market winners by Clem towards the end of the interview, so stay tuned. Comment down below what you think Clem's going to recommend. You don't have to give specific names if you don't want, Clem, but if you can if you like. And
I've
you
been
can tell
pretty
us
good on your show the last couple of times, haven't I?
You can tell us how you pick stocks. I think that's the most important thing we're looking for. Teach a man how to fish. Don't just give us the fish.
That's what the book's for. And that's what I try to do on my channel. And,
all right, we'll come back to that.
You're mad. Oh, blimey, you're right.
We'll come back to that. But I want to talk about this stock market scare around software stocks. So as you know, IBM has fallen about 13% on a single day earlier this week. Let me show you the chart. Let me just show you this chart. After Anthropic released an AI agent that is capable of reading and compiling COBOL codes, which is a significant part of IBM's business. Apparently, that's what the market thinks. And the entire company is down about, almost 30% to its trough, peak to trough from the beginning of February to February 23rd, a couple of days ago. It's a bit of a rebound now. But the entire software industry is at risk of being cannibalized by AI. At least that's what the market believes. And we have here, I'm just reading a CNBC article. I'll read you a few more stocks and I'll pass it over to you. So we have here Salesforce down 3% today, just today on the 27th. Microsoft down 1%. Cybersecurity company Zscaler down 15%. But that's after deferred revenue and billings in the fiscal second quarter missed expectations. CoreWeave fell 18% on disappointing guidance. So the entire sector isn't doing well. AI is to blame, says the press. What's your take?
Well, okay, it's very interesting. This, first of all, the idea is that if you take something like Cursor, which is a piece of software, and you can just write a little piece of code that says, "I want you to write me a noughts and crosses game with my face on it. Here's some pictures of me. Can you do that for me?" And you put that document in there, and you say, "Oh, okay, Cursor, go read that document." It reads the document and it writes that program. There it is. Didn't need a programmer for it. Boom, did it. And AI can do stuff like that now. And everyone's going, "Oh, all the programmers that held us all to ransom for the last 20 years by not actually meeting their deadlines, they're all going to get fired. Oh, no, it's the end of the world." Well, no, it's not, because good developers will generate 20, 30 times as much software now, which means a lot more software, a lot more functionality, a lot more productivity. Okay, it won't mean the software's going to go away. You're not going to, here's the good example, Salesforce. Okay, so you can imagine the salesman's going to go, "Oh yeah, can you write me a program, please, so that I can sell more stuff?" It's not going to happen, is it? No, it's not going to happen. Salesforce are still going to be producing software for salesmen who don't hardly know which way up their computer is, let alone anything more. So software is not going to be completely written by, it's not going to be written by me and you, even though we could probably manage it. It's going to be written by companies that are very, very good at giving us what we need and a lot more of it. God forbid it be cheaper, but it just enables way, 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 way more software to be developed way, 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 way more quickly and way, way, way more potently. Now, yes, if you are IBM and you're still, taking the mickey out of your suppliers who have got stuff written in COBOL from 1950, and there's only 4 really old guys who can still read COBOL, and you're holding them to ransom, yeah, you've got a problem with your business model. You definitely got a problem with your business model. But that they had that one coming. And I can't feel sorry for IBM for holding custom ATM manufacturers to ransom because they can't recode their COBOL ATMs. I can't feel sorry for them, but they'll come up with a different way to extract value. You can guarantee that at some point.
Before we continue with the video, let's talk about a company that's building serious gold leverage for the long term. Our sponsor today, Stellar Gold, is sitting on 3 major Canadian projects. Tower and Colamac are among the largest undeveloped gold sites in the country. The Tower project alone could be worth $2.5 billion after tax at a $3,200 gold price assumption. And if prices go higher, so does its value. Colamac spans over 1,000 square kilometers of greenstone deposits and could be Canada's next big gold camp. They also have Hollinger Tailings, a cleanup project that could deliver near-term cash flow. Across all projects, they've drilled over 16 million ounces of gold, which would cost over $2 billion to replicate today. With a seasoned team, Stellar Gold is one company to watch. Scan the QR code here on screen or visit stellargold.com/David Lin to learn more. Cobalt codes aside, that's just one example. Are we seeing an inflection point where we're about to see a lot of Ciscos and a lot of BlackBerries appear in the market, meaning a lot of obsolete tech companies that are going to go to zero essentially because of AI? Is that what's happening right now?
You see, a lot of these software companies have borrowed a lot of money from these parabanks, or whatever you want to call them, non-bank banks, private credit people. And I end up asking myself, why do they need to borrow all that money? They've got great businesses, they're making great profits, etc. Why are they up to their ears in debt? So yeah, I mean, I think they're very vulnerable. And they'll be straight vulnerable because they'll find it difficult to borrow money when you've got all the hyperscalers sucking all these trillions out of the system. But then we're back to, the Fed control peeing and printing money so that this group of people can actually, carry on, or just carry on. But I don't think, yes, there will be casualties. Yes, there will be disruption. There'll be lots of disruption. But will it mean that there's no software anymore? No. Will it mean there'll be no software companies making tons of money? No, that's still going to be a thing. And a lot of companies that have been pulled down by this have software that cannot be replaced by AI writing code. So, and they'll only come up with better software and they'll only come up with a way of charging for it. So, software is not going to go free.
So bottom line, are you shorting the software stocks?
No, I don't. I wouldn't short them. And I don't do shorting anyway because it doesn't suit my personality. But I will be buying IBM when they've made the correct chart pattern, which I've been talking about on my Clem Chambers Alpha channel about what you do when something dies. Like, I mean, did I talk about PayPal on your channel last time around?
Not
I was
yet.
talking about that. Everybody was saying I was mad, and then it went up 20%. So, there's a way of handling fallen angels. And obviously, IBM's a fallen angel. And at some point in the next 3 years, it will suddenly go up like a rocket, like Intel did. And I did speak about Intel on your show when everyone thought I was mad.
I've been reading different investment theses online about how to invest in the AI trade. One popular approach, or one that has been gaining traction, is the infrastructure behind AI. So we need optics cables, data center buildouts we already know. And every part of the AI deployment pattern needs some infrastructure to back it up that hasn't been built yet. In other words, whoever builds the infrastructure that's necessary for AI deployment, those companies will make money.
Absolutely. And people even further down the line, and I think I might have mentioned in your show, but I did in another show, a company called Fluoror. And they build or help you build nuclear power stations. They're going to be building nuclear power stations all over the place, right? And how many people are trusted or know how to help or manage that project? Not many at all. So anybody that knows anything about nuclear power is going to go through the roof. And the only reason there's going to be nuclear power, which was absolutely the spawn of Satan only N months ago, is because that's the only way that the energy that's required for AI is going to be made. I mean, all guns are blazing on energy, right? And nuclear power, well, uranium. get exposure to uranium, get exposure to people that can actually handle radioactive stuff. There's ain't that many of them out there, and there's just a smorgasbord of opportunity.
Yeah.
It's dazzling. It's dazzling for me. And then when you look at all the strategic minerals that are going to be required for that.
Right.
Well, who makes them? I mean, they've all gone through the roof already, most of them. I mean, I picked up some Glencore today. You wanted me to talk stocks. I bought some Glencore because they're up to their ears in strategic and critical minerals. And, it's all going to get sucked into this vortex of AI because there's no
I,
second place in AI. There's none.
yeah, I was reading this situational awareness briefing right up by Leopold Aschenbrenner, I think a former open AI researcher, and then he put a portfolio together that people have been following, and this is exactly what I was talking about. Companies involved in AI infrastructure. I'll just leave it on the screen. People can comment on that.
Networking.
Yeah.
People that make the funny chips that do the lasers to make optronics work. Yeah. So, all that stuff that gets fired down optic cables, that's all that optonics, that's really very off, down the pike. But boy, they're going to be putting in a lot of networking in this stuff. And it's going to be the fastest possible networking because AI is all about cranking out, lots and lots of computations and sending it around as fast as possible. I mean, it's just there's no end to places to look for this stuff. I mean, I just bought into a company that lays down cables, underwater cables. They're going to need lots of them, particularly as Putin is cutting them with his ships anchors. I mean, how many people lay undersea cables? It just goes on and on and on
Right.
and on. Copper for people that make generators, people that make transformers. It's just massive, massive, massive smorgasbord.
So the commodities, copper and uranium, both have already gone up a lot. I mean, are you still long?
Copper's not even started. Copper's not. All right. It's all-time high.
It's up about 50% or about in the last year or so. No.
Yeah. Well, tell me about silver. Tell me about gold.
Sure. Okay.
50%. It's nothing. It's nothing. It'll go 3x in the next 2 years. Yeah. It'll go 50,000 a ton, 100,000 a ton. Yeah, it's got a long way to go. A long, long way to go.
And this is from.
And if you want to see that, David, just go and get a chart of gold and silver for that matter, and put copper on it, and you'll see they're all going la 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 la. Bang, up goes silver. Bang, up goes gold. Copper.
Copper and silver. Sorry, silver and gold have institutional and retail investor demand tailwinds, pushing it up to
they didn't until
spikes.
All of a sudden they all went off the handle. Yeah.
Are you expecting something similar to happen to copper? It's an industrial metal.
Absolutely. Put 5 years on that.
5 years, okay. Yeah. These are not percentage scales, by the way. I'll just take out the silver and gold charts.
Get your percentage scales on there.
Okay. So silver and gold. Silver's up 280%. Gold's up 164% in the last 5 years, and copper's up 110% in the last 5 years.
If you got your axes a little bit more, in phase, you'd see that they basically track. And copper catches up on gold. If gold takes a run, copper catches up with it. Well, it's got a bit of catching up to do right now.
Okay, so we're not too late on copper. Since we're talking about these metals, are we too late on gold? Well, are we too late on gold and silver?
Gold and silver, and I think I said this on your show last time, is going to link up and grind up. And it's exactly what it's done. Yeah, nobody liked that because they wanted to go to billions and trillions overnight. But it's basically the volatility is coming out of those pairs, and they're kind of syncing up again, but they're moving together and they're grinding up. Yeah, it hasn't gone away. Yeah, it's just stopped going vertical, and it will grind and grind and grind and grind. So you could easily see 6,000 this year on gold, for example. And of course, silver can take off again if people get FOMO about it, because all silver's just FOMO gold. Yeah, and it's going to grind up and grind up while there's this global stress between America and China, which will seem a bit odd that I say that rather than Iran. But whatever goes on in Iran, however ghastly that is, and however successful or unsuccessful that is unlikely to be anywhere near as potentially catastrophic as the US versus China. So that is the big driver of gold. Well, funny enough, China's a big driver of the gold price. I wonder why they're buying so much. Gold is for war. Anyway, so that gold gold is for war theme is not going to go away until sensible people start to get back into power. And that may never happen. But it's not going to go vertical. And well, it could if you get a big, thing going off in Iran in the next few days. Yes, of course it will spike, but probably not for long. But it is going to grind up, grind. Copper, on the other hand, at some point in the next 6, 9 months, a year, is suddenly going to go whack, and that's why I'm interested in it because I got my spike, I got my 3x out of gold and silver, and bye, thank you, bye now, see you later, maybe. But copper is the next one to do that. So that's why I'm interested in that. And then a year or so's time after that, it'll be oil. And oil's going to go ballistic. Not soon, I don't think, but it will go ballistic at some point. And it's going to be AI again, because AI is going to take all the electricity. And then how are you going to power your cars? Oh, funny enough, we've got an internal combustion engine. Funny enough, we're going to ban that. And remember when we said we weren't going to ban it? And then when we said we weren't going to ban it at all? And then we said, oh, electrical cars. Yeah, we said they were good. Maybe not. Maybe they're not so good anymore. Maybe you want to be burning petrol in those because we need that electricity for AI. It's all change, David. It's all change. The AI just changed everything. We're in a new epoch, which is like a new era, but bigger. It's just, everything is in play now. Everything is upside down. Anything you thought you knew, re-examine it.
Let's shift gears and talk about Iran. So the latest round of talks between Iran and the U.S. Yielded no definitive conclusion, and no deal has been reached. Both sides agreed to further negotiations with a focus on Iran's nuclear program and the U.S. termination of sanctions on Tehran. Now, like I mentioned to you earlier, there's a large military buildup in and around the Gulf states, the largest since the 2003 invasion of Iraq. And one does not mount this kind of force, which by itself is very, very astronomically expensive to put together, by the way, without an actual intent to strike. So my question is simply this: is there going to be a strike on Iran? And if so, what are these negotiations going to do to prevent that?
Well, they're obviously hanging a Damocles sword over the head of Iran. Yeah. And, if you want to kind of take the temperature of that, just watch Bitcoin. The question is Iran panicking going to make Bitcoin go down or up? It's hard to know because Iran is a big producer of Bitcoin. So if they all decide to sell it because they need to buy tanks or whatever it is they need to buy, it might go down. If they all decide to head for Paris like they did a few months ago, it might go up. But nonetheless, if Bitcoin starts to go wild, you'll know that it's getting fragile. If gold starts to go vertical, that'll be another sign that things are about to break loose. Obviously, oil is another thermometer. And whatever's going on in these places, we won't hear about that until it's in the news and it's too late. But their mates and their mates' mates and their mates' mates will hear about it, and that will move the market. So if you want to know, just watch Bitcoin, gold, and oil, and that will give you a steer because they will move before anything else. They will move before anybody takes off from an aircraft carrier. So that's how I would play this. And personally, I just bought, a bucket of oil ETFs because, if it does happen, then that will spike, but I don't think it will spike for very long. But the idea of parking doesn't cost them anything to park the US Navy outside of Iran. They've got to park it somewhere. So it's not a question of money, certainly not at this level of danger. Yeah, it's about whether they're going to actually do it and whether Iran's sensible enough to say we won't build a nuclear weapon. We'll make sure that you can check that we're not, and we'll all re-enter the global community. And if they had any sense, they'd do that. But you notice the problem with that statement, if they've got any sense. But it can't happen because obviously, that would be too sensible and too straightforward and too easy, and everybody would be, so much better off. So probably the bombs will drop any minute.
You think the bomb's about to drop any minute?
Well, I
Well,
don't think that will happen, but I don't, these people don't tend to do the sensible stuff. They're so busy being important and so busy with their crazy ideas, they can't see how much better it would be for their people to join the global community. I mean, look at North Korea. I mean, what a terrible, terrible, terrible place. And will they ever be sensible and do the right thing for their people? No, never. And will Iran do the right thing for Iran? I doubt it. So, that's the choice. Are they going to see sense, or are they going to carry on their pathway of insanity, which they've been on for years now? And it's a 50-50 for sure. But I do think parking, a big force out on their door, parking tanks on their lawn is probably the right way to go, because they'll be thinking, oh, actually, these people can fly a rocket in through my window and kill me personally. Oh, I don't like that. I don't mind if all my soldiers get killed. That's okay. But me and my family, ooh, not so sure about that. So I should think that it should help to concentrate their mind. But we will see. And Bitcoin, gold, and oil will tell us in advance. Well, if you see it do that, you'll know it's happened.
it seems to me like there's an impasse. Washington wants Iran to permanently disable uranium enrichment to the extent that they won't have nuclear weapons. Iran argues that if they were to do that, they risk getting attacked by Iran, by the U.S. and Israel anyway, meaning they need some sort of nuclear deterrent. Okay.
No, for them to carry on being, mad as hatters, they need a nuclear bomb. Yeah, because that's the only way they can defend their ridiculous position. I mean, look at Putin. If he didn't have a nuclear arsenal, it would be a completely different story. And what does he do? He waves it all the time. Oh, we might nuke you. Oh, no, don't do that. We might nuke you. I mean, these people, they're appalling. They're an absolute abomination.
Yeah, but okay. We'll move on from this. But even if you have a nuclear weapon, right, and you're not friendly to the United States, I don't think the reasonable assumption here, and again, I've stressed the word reasonable. I don't think the reasonable assumption is that the U.S. and its allies will get nuked. We have something called mutually assured destruction. North Korea has.
Yeah, they
nukes.
don't care about that.
Russia has had nukes
let God sort it all out. That's what they say.
Yeah.
Kill them all. Let God decide.
By the way, Kim Jong-un has just made a rare statement. This week, he's declared his intent to expand North Korea's nuclear arsenal and operational range, calling on the United States to respect his country's nuclear power. The U.S. and North Korea could get along, he said, but only if the U.S. accepts that North Korea's nuclear weapons are here to stay. I don't know what this means. He's extending an olive branch, but the point is
attention. He's getting lonely. Nobody's bothering him anymore.
How do you feel about European security, by the way? So this is NATO Secretary General making a remark earlier. He said after Davos that here, I'll just pull this quote up. He said to to NATO members, "If you think that we can manage our own security with the United States, you're dreaming." That's to European NATO members. You're in Europe, sure. You're European. How do you feel about raising the defense spending? Basically, he's saying, he isn't arguing that Europeans are defenseless. He was just saying that in order to do that themselves, they have to raise their defense spending to near 10% of GDP.
Well, I don't know about 10%, but it's going to happen. They're going to be able to raise their budgets, and they will. And if Ukraine can defend itself against Russia, certainly the rest of Europe can. And there's a simple way of looking at it, right? If you're going to have an enemy, make sure they're pretty weak and make sure they're not really a completely credible enemy, because you don't want to be picking on somebody who actually can hurt you really, really, really badly in a punch up. And Russia's 150 million people, minus however many just got killed, yeah, and it's got $7,000 at a GDP per head. Well, Europe's got 500 million people, and it's got $28,000 GDP per head. So if that group of people can't sort itself out, and be a dominant force against Russia, well, something wrong there, then isn't there? But I don't think they don't want to. I mean, Europe doesn't want to fight. It's not like that anymore. it doesn't want to go down that road. It doesn't want to escalate. It would prefer that everybody was just, muddling along. Europe is a muddling along place, but it's not terribly run. They're not totally stupid. And they are making, they are busy. All we have to do is look at Rheinmetall's share price to see. And Rheinmetall just makes shells. I mean, they make a bit more, but that's all about shells. Yeah. Rheinmetall, Airbus, all the European military companies, they're all way up, way, 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 way up. And they're not way up because they're not getting lots of orders to make stuff. Yeah, Europe will be more than able to defend itself without America in 3 to 4 years, and it probably would do all right as it is now. Because remember, if what is the European land forces moved into Ukraine, Russia wouldn't be in Ukraine, not for very long. Yeah, but Europe doesn't want to do that. Europe doesn't want to go that road. That's the whole point of the EU, was to get away from that kind of behavior. Did that for 1,000 years, 1,000 years of mucking about like that. And they prefer there to be peace and prosperity than war and death. Who wouldn't? I mean, apart from a few people out in the east there.
Would you be long European defense stocks then?
I'm long. Yeah, I'm long. I'm longer than a Rhino and Viagra.
Okay, it's very, very vivid, but okay, we understand your point. What would change that? Maybe let's say the Ukraine war ends this year, for example. You would take some. You would reallocate. It would
be hard for it to end in a way. Yeah, very hard for it to end in a way whereby Europe doesn't rearm. Yeah, so if Putin said, "Oh no, I made a big mistake. We'll all be friends now. Yeah, we'll just stop now. We've built all these trenches and big tank stopping and barbed wire things, and we just stop flying stuff over to kill people, and we just sit there and make coffee and tea and watch. We'll just do that." Well, that's not going to make anybody believe anything, because Russia has historically this really bad habit of having a war, calling it off, doing a nice treaty that says we promise to be nice people, and then leaving it a few years and then going and doing it again. I mean, it's absolute history of doing that. Absolute history of doing that. And, I think that with that in mind, no one's going to think that any sort of peace is going to be permanent. Not if, Putin won't do that anyway, unless he's assured that he's not going to end up on the wrong end of a bullet. So, Putin would have to be there. And even if it wasn't him, even if it's someone else, the habit of the Russian polity is to take a pause, take a rain check, and then carry on later. And, they're quite capable of making a load of old toffee up while they're doing it. People are basically to Russians in Ukraine, therefore going to kill millions. I mean, none of it makes any sense beyond the fact that Russia wants to expand. And they won't just stop. So let's just say they stop. They stop tomorrow, hold a load of toffee, sign lots of paperwork, promise to be good boys. Europe's not going to say, "Oh, that's fine. We don't need any soldiers now." They're just going to carry on rearming to make sure they can make it stick.
So Russia still remains Europe's largest threat. I mean, that's the way they're buying Russian natural gas and cheap oil, right? I mean, but by the way, that was my next point. They still need oil to rearm. Where are they going to get that oil from? Right, the most convenient place would be Russia, isn't it?
There's this North Sea thing full of oil.
Yeah,
and there's no shortage of oil. $60 a barrel. They might as well be giving it away at the moment. That won't last, but oil is as cheap as chips. And no, look, it's not Russia. It's the people. It's not about maps and soldiers, and it's about the people. It's about the people at the top. It's always about the people at the top. So the threat isn't Russia. The threat is Putin and his crew.
Yeah. Okay.
And the threat isn't China. It's Xi and his crew. I mean, it's these leaders that go off the rails because they look at a map and go, "See that bit? I like that bit. I want that bit. We should have that bit. What's it doing there? There's a funny line there. It shouldn't be there. It should be there." It's that craziness of map thinking that causes all this trouble. And there's absolutely no proper reason and no proper benefit for any of this, but it doesn't stop the likes of these people from creating mayhem, destruction, and risking, apocalypse, because they're in power and they want to go in the history book and they want to be, how many books have, how many, take any good American leader that hasn't been around for say 20 years and tell me how many books are on Amazon about them. 20, 30? Now pull a book on Adolf Hitler and tell me how many books there are about Adolf Hitler. I think you'll find there's a good number, i.e. 4,000. And a lot of these people, they just want to go down in history. And, it's we're the ones that go down in history for their benefit. So they get a chapter.
By the way, let's move on. All European
Yeah,
nations
sure.
are not made equal. I was reading just today that the Italian GDP per capita has caught up with France's GDP per capita. Let's assume that's true. I haven't, verified the numbers myself, but it's been, Italy's economy has been growing quite fast of late. But let's assume that's true. We are seeing shifts in economic power of the G7 countries and Western Europe overall. Which regions in Europe would you bet most on in terms of growth and productivity and so on?
Well, the frontier nations in Europe, your Bulgarians and Romanians, they're very interesting. And if you look at Poland, Poland's, cracking on. So, it's a very, very, very rich area. And it's very, very stable, and it's too stable. That's what people complain about. It's too stodgy, and it's not taking up AI cudgels. It's being slow off the mark there, so which could be relatively not good for Europe. Can I borrow some of your AI, please, America? What do you mean no? So there's a fairly big lag with the fact that Europe is very socialist. Okay. But it's a good area to be in. And there are the frontier countries like the Polands, Latvia, Lithuania, Estonia, and Bulgaria, Romania. They have very low tax burdens. And, there's pros and cons. But I mean, life is good in Europe. Okay. And life is good in the West. And we're going into a new epoch of radical change because they've gone and invented artificial brains, and that's going to change everything. And with a bit of luck, the madmen that are causing so much disruption at the moment, that era will pass, and we'll have some sensible governance back, and we'll have some monetary control back, and we'll have get the deficits under control, and growth will make that all sensible again. I mean, look at someone like Denmark. Denmark has no national debt. It's a small national debt. I mean, it's tiny in comparison with America. And you go, well, why? Well, because they run it properly there. But I think that there's two roads. There's what AI and NS, right? AI, artificial intelligence, and NS, natural stupidity. And there's a bit too much of that out there at the moment. And I think that overall, though, we're going to have an economic boom, and that is going to do good things and massive amounts of opportunity for people that are not terrified by what's going on in the media and look for the opportunities. Don't worry about the fact that everyone's going to be unemployed and AI is going to take over the world and a meteorite's going to fall and the dollar's going to be shredded and all that stuff that two clicks away from here that will tell you, give up, just climb under a rock and say goodbye. No, 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 no. This is going to be a golden era. So, get on your
Speaking
front
of
foot, pick
speaking
stocks,
of
and
golden
make money.
eras, speaking of golden era, we've got 101 ways to pick stock market winners in the supposed golden era. Tell us about this book. Just give us a few ways to pick stock market winners, Clem. Just give us a teaser on the show today, and then
Okay,
we'll pick up the
okay,
book.
okay. I can't remember what I wrote because I wrote it a decade ago, and it was a bestseller, and it was number one. And I'll be doing my channel, and I've picked out so many winners. You can see them all. It's ridiculous. I've got to make a blunder at some point. I mean, it's silly. And I thought, and everyone started to say, why do you do this? Why these are all too good. How come? And I thought, well, it's my book. It's like $8 now, dollars. It's all in there. You don't have to listen to me. Just look at this book, and it gives you 101 ways. So, for example, a classic is you buy low PE ratios. It's a classic. It's only 1 in 101. And it's like, don't buy stuff when the government might suddenly say, oh, we don't like you doing that. Stop that. No, we don't want you to do that anymore. So avoid what I call political footballs, which is at the moment, probably, not particularly useful because everything's a political football. But it's like 101 heuristics like that, where you can go through, and you could go chart pattern. Oh, there's a chart pattern. See that one? That means this. I mean, for example, with IBM, they're going to come down. Don't buy the falling knife. They're going to bounce. Don't buy that. Buy the last leg of the W, which will probably be in about a year or whatever. Lots of little tricks like that. So when you go, should I buy Salesforce? You can go through and, I don't like, no, yes, 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 no, yes, no. You've got all these heuristics. You look at a stock you've never seen before. What's that? And you can look at it and go, it's got insiders buying. That's another 100 of the 101 ways, less than 1% of how you should look at things. Insiders are buying. They're buying a lot. Oh, I wonder why that would be. Maybe it's going up. And lots and lots and lots and lots of rules in a very down to earth, simple to understand way. So, for example, there's just so much out there. Someone like Glencore, which I bought today, I bought a pile of Glencore. They're paying a dividend. I know Americans will find dividends surprising. That's not normally what goes on, but paying a dividend up to their ears in strategic and critical metals. Yeah, loads of copper. And you could go through the book and pull out probably 10 or 12 of those little ways that would tick, but you could tick with that idea. And also it gives you the structure to work out your own ways. You might disagree with every single one of my 101 ways, but you go, maybe I should have 20 of my own. Yeah. And that's how I used to before I can just do it automatically. I used to just go, here's 7 or 8 different ideas, mark them out of 10. Take these 10 companies and then add all up those scores and pick the best one. And do that every 3 months. And you end up with a portfolio, a damn good one as well.
Clem, thank you. We'll wrap that up. Please do follow Clem's work, Clem's book. And besides the book, Clem, where else can we find you?
Clem is here at Substack for those that want text, and Clem Chambers Alpha on YouTube, where you can see all my videos and marvel at the fact I haven't made a blunder yet. I'm sure there's one coming up soon. But it's really an educational channel because I just try to explain people how to think about stocks. It's not the stocks themselves, it's the method that's important. And my method doesn't have to be yours. You can use the same structure to have your own method. I'm not a momentum guy. I wouldn't touch NVIDIA with a 10-foot barge pole, even though I used to work with them 25 years ago. It's just too spicy for me. And, I could have made a fortune. Like Warren Buffett, he wouldn't touch NVIDIA. Yeah. But you can have your own structure that would pick out those sort of stocks. You can make a load of money, but you have to have a structure and you have to kind of get the idea of what a structure could be to build your own stock picking, asset picking filters. And really the book does that, as well as giving you some ideas on the heuristics that I use.
Let's wrap it up here. Thank you very much, Clem. We'll speak next time.
Look forward to it.
And thank you very much for watching. Don't forget to like and subscribe. Follow Clem. Links down below.